Hello everyone, my name is Shenyuan Hu. I'm the founder of Joint Commonwealth Fund or JCF. So welcome to this week's JCF Weekly. Today we're going to talk about why blockchain might impact real estates and why you should care. Okay, so in today's JCF Weekly, what you will learn is how blockchain could potentially impact the industry of real estates and what are its main effects, what's the benefits of adopting blockchain, and also what is tokenization as a service or TaaS, the model. Okay, so basically we all know that real estate is house, lands, the selling, the rental of these estates. It's one of the the biggest industry and largest asset class on earth, and literally this is the deal about earth. I remember many years ago when I was traveling in the States, and there was a fellow passenger who was in the real estate business tell me that the best deal on earth is earth. So basically, obviously people make a lot of money from transactions regarding real estate. But we also know that compared with other kind of asset class, real estate is what's called a more illiquid. It's not as liquid as other kinds, such as stock markets or bonds, because in those markets you can pretty much buy something and sell something quickly and easily. Once you have a stock trade brokerage account, you can just buy, sell stocks, within seconds if you have a computer online. But for the buying and selling of houses and lands, that you usually have to go through some negotiation process. Usually it's time consuming. And even if you agree on the price, you will have to, sign contracts in order to transfer the property rights from a person to another. So compared to other asset class, while we do in general feel that real estates are a kind of a more stable and a safer assets to own, because land and houses does have some intrinsic and inherent values in that you can either build things on land, or for buildings it can be rented to generate some revenues for the owner. Although they have these benefits, but the benefits compared to the potential liquidity, it may not be something that people generally look forward, if they're in need for some high liquidity. But that's all going to change with blockchain, with the appearance and adoption of blockchain. How so? Okay, so this goes back to what blockchain is. You have to understand the blockchain is the technology behind things like Bitcoin, what's called cryptocurrencies. But essentially what it is really just a ledger, a distributed ledger or an account book that records the transactions of all the transactions, from A to B. And it can be either transactions of like currencies of monetary value. So that would be what Bitcoin or Ethereum are doing. But it can also be, recording the transaction or transfer of ownership, such as lands or other kind of properties. So one really powerful and potentially impactful way that blockchain will have on various industry is to be able to take some existing asset, like let's say a house or land, and then tokenize it into many, many small pieces. So part of this you can understand for example, a company, it's really, company is really just a concept. There's nothing real about company. But company ownership can be broken into many, shares of stock of a company. So when a person holds a share of the company, essentially you are owning a part of that company with the related or relevant rights. So for example, if you have a share in Apple, for example, then what that means is you can vote on regarding during Apple's shareholder meeting. You can have a vote of say in that, although it could be a very tiny one. And you can also have dividend payments when Apple is releasing cash dividends or other kinds of, stock dividends. You also are entitled because you own a piece of Apple. The same cannot currently be said true for, lands or houses. But with blockchain, what happens is you will then be able to tokenize the land or house ownership into, again, many different small pieces. So that would obviously have two effects. One is to lower, the entry of barrier in terms of owning some properties. And also another very powerful thing is once this, token is created, it can be then traded on its own by itself on what's called the exchange services. So there's roughly, I think, close to about 20,000 exchanges in the world now that are doing various kinds of cryptocurrency exchange. So if your real estate token is being listed there, the effect of that is that people will be able to buy and sell simply on the basis or at the units of a token. That could be, tremendously much cheaper to own and to transfer. For example, if you have a house that's worth like $1 million, if it's being tokenized into 1 million pieces, then how much would it cost to own one? Well, it's just $1. Okay. So then it will be much easier to whether to buy, sell, or to liquidate the asset, right? And so that potentially will also bring up the property's value, because liquidity itself is a kind of value that a lot of the people, would decide whether they want to hold an asset or not. Okay, so potentially if the real estate industry are adopting blockchain technologies, it could tremendously, one, boost up the potentials or the values of these properties. And second, it can also create a more global, dynamic, and liquidated market. So that's the basics. And so what are the main benefits, of a tokenized, real estates? So we mentioned about the increase of liquidity, but also like some compliance issue or ownership checking issue can also be more or less automated away. Because, for example, if there are certain requirements regarding citizenships, let's say, for example, in terms of owning a property, you can actually dictate that into the mechanism itself. For example, if you want to purchase or own a certain kind of token or create an account to own the token, you might be required to prove your identity first. So this combined with the proper technologies, it could make the verification of the buyers and sellers much faster, easier. And also it can verify the validity of the rights to the ownership, to the property, also a lot faster. Like in the past, when these land or house ownerships are proved by the holding of some documents, the documents can be forged, right? There's maybe an industry of forgery that's related to this kind of, forgery practices. But with tokenized, it's something very hard and difficult to forge, and because it's all protected, guaranteed by cryptography. So once, you can easily verify whether someone really owns that much or that many tokens or assets simply online. And also there's another benefit is that the marketplace for these kind of tokenized assets can first be global, and second, be 24 hours a day, 7 days a week. So right now, if you want to, buy or sell lands or houses, you probably have to wait until the business hours are open, and when you can maybe get a lawyer to come and to co-sign with the contract or to verify the contract. But with tokenized assets, that all goes away. You can do your trading 24 hours, 7 days a week, anytime. So that's, again, tremendously powerful thing. And reducing entry barrier. And also because the nature of blockchain records are unchangeable. So these benefits really would disrupt the real estate industry. So there's now, companies that actually provide tokenization as a service. So this is called TaaS. And one such company is called Abstract Tokenization, which I encourage you to go online and to check out. Okay, so that's it for this week's JCF Weekly. We'll see you next week.